Last week, a $1 billion class action lawsuit was filed against these influencers and their creator agency for promoting, assisting, and or actively participating in an offer and sale of registered securities. But what unregistered security? Well, according to the complaint, the unregistered security is the yield-bearing account that FTX had on their platform. For those who don't know, FTX Trading was a huge crypto exchange platform that went bankrupt last year. Their ex-CEO Sam Bankman-Fried is facing numerous charges, including fraud. Billions were lost and stolen from investors all around the globe. One of the reasons they got so big was through advertisement, including paid promotions with these influencers. Now, these influencers are big finance YouTubers that got big in the last couple of years, especially during the pandemic when people were getting laid off and they just realized that they weren't as financially literate as they thought to be. These people searched up ways to safely invest or find high yield savings accounts and updates about the stimulus checks. And I would know, I was one of those people seeking all of this information during that time. And so everyone who was making videos about this saw a huge increase in their views and subscribers. It was during this time where I started to watch Graham, Andrei, and Meet Kevin. And full transparency, I still watch them, although not as much because I've realized that their content is just super repetitive now. Not all of their videos are terrible, and I'm the type of guy who skips through any sponsors or ads, so I wasn't really affected by any of the things they were promoting, but unfortunately that's not the case with everyone. And a lot of people trusted these influencers because they really made it seem like they knew what they were talking about and that they were finance experts, even though many of them aren't even certified financial advisors. And sure, they say that they're not giving #financial advice, but come on. I feel like if you have a decently big audience and talk about a stock or crypto that you yourself are invested in, I'm pretty sure you did that video with the hopes that your audience would also buy into it, even though you didn't explicitly say to do so. But okay, why is all of this relevant to the lawsuit? Well, because there's another lawsuit out there against high-profile celebrities for also endorsing FTX. But I wanted to emphasize that even though the celebrities may be more well-known to the general public, these influencers tend to have more loyal audiences and would actually listen and follow to what they are saying and promoting. And these YouTubers have to know this. Many of the things they promote have referral links, where I'm sure there's a graph out there that shows how many people signed up through their link. These channels also have one of the highest RPMs, which is what YouTube pays these creators for the ads that are shown in their videos. Their RPMs are so high because these ad companies know that people watching these types of videos are more likely to click on the ad and buy whatever is being promoted to them than in other content. And so these companies are willing to spend a lot more money to have their ads placed in these videos. And I'm pretty sure the same thing would apply to the sponsored ads integrated into their videos. Since these YouTubers are trusted, people are willing to trust what they promote, including FTX Trading. And it seems like some of these YouTubers were even paid 6 figures to promote FTX on their channel.
The deal between FTX and I were supposed to run through the end of this year. I don't want to disclose the specific numbers, but I'm going to try to be as transparent as possible. Multi-6 figure.
And well, this isn't sitting well with all the people who lost their money. So enough ranting, let's move on to the lawsuit. As mentioned, these influencers are being sued for $1 billion for promoting, assisting, and or actively participating in the offer and selling of an unregistered security. But we just said that they were promoting an exchange platform and not a specific crypto. So what gives? Well, the complaint is arguing that these influencers promoted the yield-bearing account that FTX had, and that the yield-bearing account are indeed securities. Well, the yield-bearing accounts were these wallets or accounts in which you would add your crypto and you would make some interest back in the form of a yield, similar to savings account with a bank, except the returns here were super high with crypto companies. However, securities is a tough word to define. The Securities Act gives a list of things that would be considered a security, and to many, when we think of security, we think of a stock. This is a type of security, but not the only one. There's also a catch-all term called investment contract. An investment contract is a security under the statute, and to find that something's an investment contract, we look at the Howey test. Now, the Howey test says that an investment contract exists if there's an investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. So let's break that down. Essentially, it says that 1, there's an investment of money into a common enterprise with reasonable expectation of profits derived from the efforts of others. In theory, anything could be an investment contract if these elements are met. In my securities class, my professor gave us an example where guinea pigs were considered an investment contract, and thus a security. So does the yield-bearing account meet the requirements of an investment contract? Well, this complaint seems to say so. They talk about how the SEC has started determining certain cryptocurrencies as securities and how it's also been cracking down on crypto lending products. So they argue that under these reasonings, this would also be considered a security. Now, they give two examples that closely resembles what's happening here in this case. The examples involve BlockFi and Coinbase. So the first example is about BlockFi. BlockFi had their BlockFi interest account where, again, people would add their tokens into the wallet and they would make interest off of their money. Well, the SEC called this a crypto lending program, which they charged BlockFi with failing to register the offer and sale of this BIA product. Their other example was in regards to Coinbase's lending program, and in that case, the lending program was considered a note. Not all notes are a security, but if it passes the family resemblance test, it is. Well, in this case, the lending program was found to be a security. And the point of these examples is that YBA is similar to these lending programs, but you still have to analyze it independently to see if it's a security. And so the complaint does that, and it goes through all the elements of the Howey test. It says that, number one, people are investing money into the YBAs, so yeah, the element is satisfied. Number two, the common enterprise here would be the FTX YBA that all these plaintiffs are putting money into. Number three, there was a reasonable expectation of profit because they were being promised up to 8% of yields to all the FTX customers. And number four, that the profits were derived from the efforts of others because the customers didn't have to do anything besides just put their money in there, and that the yield was entirely earned through FTX's efforts. They also argue that the YBA was also a security because it was a note that passed the Reeves test and that the analysis mirrored that of the BlockFi case. Now, the complaint focuses a lot on arguing that this is a security, an unregistered security, because their causes of actions are heavily based on the fact that these YouTubers promoted an unregistered security. The complaint had three causes of action. One, the violation of the Florida Securities and Investor Protection Act. Number two, the violation of the Florida Deceptive and Unfair Trade Practices. And number three, civil conspiracy. The Florida Securities and Investor Protection Act says that it's unlawful and in violation for any person to sell or offer to sell a security within the state of Florida unless the security is exempt, the transaction is exempt, it is a federally covered security, or it's registered under Florida law. The liability for a violation of the statute extends to agents, which these YouTubers would be according to the complaint. So if YBA would be considered a security and the YouTubers are considered agents, they argue that they are in violation of the statute for aiding in the offer and sale of the unregistered YBAs via promoting it. Now, the Florida Deceptive and Unfair Trade Practice Act isn't about securities. This has to do more with consumer law, and it exists to protect the consuming public from those engaging in unfair methods of competition or unconscionably deceptive or unfair acts or practices in the conduct of any trade or commerce. It's argued here that they are violating the statute for using unfair and deceptive practices and acts of falsehood advertising by paying into the Ponzi scheme that was FTX. Now, lastly, civil conspiracy is focusing on the fact that FTX and the YouTubers had agreements to promote FTX that included numerous misrepresentations and omissions to the plaintiffs to induce confidence and to get these consumers to invest into what eventually turned out to be a Ponzi scheme. They argue that they misled customers into believing that FTX was safe. What do you think? Do you think this lawsuit will be successful?